Bitcoin ETFs are buying. Whales are buying. Billions of dollars are flowing into Bitcoin. So why is Bitcoin still stuck around $65,000? Someone is selling, and the market may be hiding who it is. And what happens next could decide Bitcoin's next major move. Let's break down what's actually happening. If so much money is still entering Bitcoin, why isn't the price going up? At first, this doesn't make sense. More buyers should mean higher prices, right? But Bitcoin doesn't work that simply, because the market isn't just about how much Bitcoin is being bought. It's also about who is selling, how much they're selling, and where they're selling it. And right now, $65,000 has become a very important battleground, and what Bitcoin may need to finally move higher. Let's start with the Bitcoin ETFs. When money flows into a Bitcoin ETF, the fund generally needs to acquire Bitcoin to back those shares. That creates real demand for Bitcoin, and that's obviously bullish. But here's where people make a mistake. They see ETF inflow and immediately assume Bitcoin has to go up. Not necessarily, because the market has two sides. There are buyers and there are sellers. Imagine $500 million enters Bitcoin ETFs. That sounds huge. But if existing holders are selling hundreds of millions of dollars worth of Bitcoin at the same time, the buying pressure can be absorbed. And that's exactly why ETF inflows alone don't guarantee a breakout. Are ETFs buying? The real question is, are ETF buyers buying more Bitcoin than sellers are willing to sell? And this brings us to the $65,000 level. Bitcoin has been moving around this area, but it hasn't been able to establish a strong move above it. That's important, because a resistance level becomes stronger when the market repeatedly fails to break through it. Every time Bitcoin approaches that area, some traders take profits, others open short positions, and some long-term holders may simply decide, this is a good price to sell. So Bitcoin needs more than a quick move above $65,000. It needs confirmation. A real breakout would mean Bitcoin moves above the level, holds above it, and attracts enough volume to prove that buyers are actually in control. Without that confirmation, a move above $65,000 could simply become another failed breakout, and that's exactly what traders are watching. But who is selling? Here's where things get really interesting. If ETFs are buying, and large investors are accumulating, who is selling Bitcoin? There isn't necessarily one single answer. Bitcoin has millions of holders. Some bought Bitcoin much lower. Some are taking profits. Some are rebalancing their portfolios. Some traders are closing positions. And miners and other market participants can also create selling pressure. So even when new money enters the market, there can still be a large amount of Bitcoin available for sale. Think of it like a tug of war. On one side, ETF demand, institutional demand, whale accumulation. On the other side, profit-taking, existing holders selling, short-term traders selling resistance. The price doesn't move based on one side alone. It moves when one side becomes significantly stronger than the other. And there's another factor most people don't talk about. Liquidity. Bitcoin can have strong demand, but if liquidity is thin, price can behave very differently. A large buyer entering the market can push price higher, but if sellers are waiting at higher levels, that buying pressure can quickly get absorbed. And this is why sometimes you see Bitcoin suddenly jump, only to give the move back a few hours later. The market needs enough liquidity to support a sustained move, and that's also why volume matters. A breakout with strong volume tells us something different from a breakout with very little volume. If Bitcoin breaks above $65,000, but almost nobody is participating, that breakout becomes much less convincing. But if Bitcoin breaks above $65,000 with strong volume and continued demand, now we're looking at a completely different situation. There's another reason Bitcoin can stay flat even when the news looks bullish. The market may already know. This is one of the most important concepts in trading. Sometimes investors buy an asset before the bullish news becomes obvious, so when the news finally arrives, the market has already priced it in. For example, ETF inflows are positive. Institutions are buying. Whales are accumulating. Everyone starts talking about how bullish Bitcoin is. But if traders already expected all of this, there may not be enough new buyers left to push the price significantly higher. That's why a bullish headline doesn't always create a bullish price reaction. Sometimes, the good news is already in the price, and the market is waiting for something stronger. So what would actually change the story? Not simply another headline about ETF inflows, not another whale buying Bitcoin. What I would want to see is price confirmation. Bitcoin needs to break above the $65,000 area and, more importantly, stay there. Then we want to see stronger trading volume. We want to see buyers continue stepping in after the breakout. If Bitcoin breaks above $65,000 and holds, the market could start looking toward the next resistance zone. But if Bitcoin repeatedly fails to break through, then $65,000 could continue acting as a ceiling. And that's why this level matters so much right now. But if Bitcoin keeps getting rejected around the same level, then the market is telling us something very important. The buyers may not be strong enough yet.